Hello, welcome to the live. This is Kit Wong, and today we are talking about the Dow Jones market. The Dow Jones market have been moving big time down and then up and then down lately. So in this live session, I'm hoping that I can catch some of the movement. I'm hoping the Dow will go back up to around 258.32, this area, and then we'll go back down and breaks here. But maybe later in the time, like in the September, it will break this low, the previous low in the 25,000. So here's why I see this. So in talking about this, I'll talk about 4 different sessions about this live. The number 1 session is how I see the market. The number 2 session is how to use simple math to power up our charting program, our charting pattern and technical indicators. And then number 3 is how I made this Dow Jones outlook. And number 4 is to answer if there's any questions from you guys. So I guess you guys like to use trend lines. What trend lines essentially is connecting different bottoms and tops so that it reveals a channel that the market is doing. So there are plenty of ways to draw different trend lines. Like you can connect these bottoms like on the green line and form a parallel line, and then you will regard this market as slightly moving up, or you can connect these tops and then form this blue line, and then which also writes a parallel line here, and then you can see the market going slightly down. So there are lots of different versions of it. Which one is correct? We'll never know. Or can we? Before I go further, let me ask you a question. Do you really think we can predict the market future? With the seeming predictable events like now, like you will never know when the next tweet on Donald Trump, he will send out the next tweet, or you will never know when the China-US talk will be on progress. Like in just 2 days ago, the China-US, there was news in the market that the China-US talk has been going smooth, and then they will have telephone call between the 2 trade associations to discuss how they can continue the talking. And then the market already boosted with 600 points. But then the other day, it go back down. So do you really think that we can predict the market? Here is how I see the market. I see it as they move in an energy block. And while they are moving in the energy block, they follow a certain pattern in the market so that we can catch this longer term of energy block movement. Let me explain what I meant by that. This is the TradingView platform. The good thing about it is you can actually do forecasts on it, and then without, you see, I'm the user, the admin guy of my account, but then after I post a forecast on it, I am not able to edit it, except for this. So this is the detail of my account. This is what I forecast. I'm allowed to post comments, but then I cannot even delete or edit my earlier post. So this is when I post, and then I see there's an energy block going here. So you see, this is when I post, and then I see the energy block going here, and you see by pressing this play button, you can see the market unfold as it is doing this energy block here. But I'm not right every time. So sometimes I could be wrong. So this one, I suggest to long the Bitcoin market while stop loss at here. So the market did go up a bit not continue all the way the energy block as I thought, and then it flipped. But before it flipped, we always get tips from the market. We always get hints from it, because on August 12th, I said we should close at 11410, and then it might fall back to 8,000. So see what happened on the, this is August 12th. August 12th is here. So basically I enter here, exit here, and then knowing that there's a new energy block that moved down to 8,000. So that before it moved, we are still hinted from the market from those repeating patterns. And I'll later teach you how to spot them. And then this is another forecast, euro, and I forecast it will go up. This time it just stop loss. Didn't go much as I want. Actually, it did reach the energy block that I expected, but then there's in the middle, there's like a great downfall. So this is where we want to prevent it. So this is how good it is. As long as we can set an effective stop loss, which a stop loss can protect our risk, then we are very safe from getting to the energy block. So we just, every time we just lose this 25% of the potential profit, and then if we gain the whole 100% of our potential profit. So running that in the long run will give us profit. So this is another energy block that I see that it is going to move, and then you see the market did unfold as it is. So you can see that this is another forecast, energy block going down, and the market went as is. So you can see that in a summary of those recent 6 forecasts included, Bitcoin, I see a great fall, and then there's a great fall on the energy block. So you can see that I'm not right in every time, but then if you see in the midterm, we can always get correct, even though you don't know when the Donald Trump will send his next tweet. You don't know when the economic news will release a good data or a bad data. In the long run, it is relatively easy to guess how the energy block will unfold without knowing the small detail movement. So the small detail movement, we cannot control like this. We cannot control. It can go something like here and then go back down, or it can go down immediately and then stay here. We cannot control the small movement, but we know the energy block is going down. So in summary, there's 3 points I want to mention. For the relative long mid-future of the energy block, it is predictable. The second one is, as long as we have an effective stop loss, like here, if the market go wrong, we can be hinted from the market. And then if the market doesn't go the full way as the energy block that we assumed, we will get hints from the market, and then before it turns south for this Bitcoin example. So now let's get back to the market. This is, so again, that was not, I didn't handpick 6 forecasts out of 10 or 15 forecasts. That was the last 6 forecasts I got, exactly. So the market seems a little bit down since we had the live, but I'll set like, I hope by the end of the live, it will go up a little bit more. So I'll set an effective stop loss here, while I'll hope the target by the end of the live maybe reach somewhere around 25750. So around 200 point up. So we never know which trend line that we draw is correct. But then there's a little trick on it. We can use a simple math to validates which the market is going with, which channel the market is going with. So the trick is this. Supposedly on all those technical indicators books, it says between the cycle top and the neckline, if the market were to break it, it should unfold the same length between the cycle top and the neckline. So if we are looking at this green thing, actually the top should be this one because it is the highest cycle top here. Or even if you treat it as a smaller one, we'll do two tests. So one is this length, which is copied here, and then the second one will be here, which is a bit longer, and then I copy the length and see when it breaks the neckline, what does it do? So for the green channel, it breaks it here. So I move the green line a little bit close to the actual market movement. You can see that it is does not do the exact move as it is supposed to do. So let us compare it with the blue channel. So this is the blue channel. This is the cycle top. This is the neckline, and then we copy it, and then we take a look. We copy it, and then we take a look which is doing better. It seems that this one is no good, right? Because the blue is closer than the actual movement. So we remove the possibility the green one is doing the correct channel. This one, I will not use it despite this one. Okay, sorry, this blue one, we actually should be placed here because the break is actually right here. So you see it is much closer than the green one, so we remove this possibility as well. So we will treat the blue channel as the correct one. And then what does that mean? So this would mean the following down movements beginning point should be counted here instead of the green channel line maybe here, because this is the last top, rather than this is the last top that hit the channel line, rather than this one. This is the green one is this one point the top of the channel line. So and then out of all those indicators, RSI, MACD, stochastic, I like to use those math-based indicators, which is this golden ratio Fibonacci retracement table. So if we pull a diagram from the highest top to the lowest bottom here, we see that the market is reacting to this blue channel's cycle top very nicely. First, we got the confirmation that the market is doing exactly as the cycle top versus its neckline length. So when it breaks, it gets the same length between the cycle top to the neckline to the cycle top right here at this low. And then this is the first thing that we use this 1:1 ratio, this simple math to validate this blue channel. And then we got this downgoing market. And then you see how, if we draw this diagram, you see how much points it reacts to this golden ratio. Right here, 786, 618 right here, 382 here, and then also 236 here, and then the 0 as here. So you see, the market actually works, the energy block actually works with those mathematical patterns. But then you just do not know how to draw the proper diagram. If you thought the market was reacting to this green channel and then think this one should be the cycle top, then you see all these levels are off. 786, it go down, it breaks 786 and then go back up. And then 618, it seems there is support, but then it breaks. And then 0.5, not much signal given to the market. So compared to the one that we have the one-to-one ratio validated blue channel. This diagram, this golden ratio is working a lot better. You see the 618, the 236 ratio here is working very nice, as well as this 786. So this is why I said the market is likely to hit this area again. But so far it is still not yet to go up because the overall market is going down. But I'm still hoping we can see this later. So you may say this is only just one example. So maybe I'll raise another example how we can use it. So this is more exaggerated because this one you can have the blue channel which connects this lows and this highs to think the market is doing this, or you can have this green channel having this bottoms, this tops, and then this revisited bottom, revisited neckline. So you do not know which one is correct. And then we can use again that one-to-one ratio hints from the market to see which channel the market is actually working. So to save time, I have already drawn the trend line, and then this is also where this green vertical line is from the neckline to the top of the channel, or you can say the head shoulder formation. And this blue vertical line is within this bigger downgoing channel. This is between the neckline and between the cycle top. So supposedly, if this one breaks, supposedly this one has to go 1+1, 1/1 ratio. So it breaks here, and then the 1/1, 1-to-1 ratio here, the market did not went as much. So very likely this is not the actual channel that the market is doing. So let's see if this green channel is the right one that we have been drawing with. So here this one breaks the green channel, and then you can regard this as the small channel it is forming. And then this one. So this is the cycle top, this is the neckline, and then when it breaks, see what does the market do. See if it confirms the channel that we're trying to draw. So you see the market went right to the price that it should stay. 1-to-1 ratio. 1 ratio between neckline and cycle top, and 1 for the break neckline to the cycle bottom. So this is the correct channel. So what does that mean again? So if we draw another the Fibonacci diagram with the last touched cycle top here, you can see again this 786, 618 will work a little bit, will work nicely. 3, 2 here, and then there give a little bit pressure, and then after it breaks, it rebound. So if you connect the right top, which is here, you see this 786, 236, and then this 132, although it breaks a bit, but it still has pressure, works relatively much better than if you thought this blue channel and use this as the cycle top. If you use this cycle top, this doesn't provide any, this provides support, but then it like breaks a lot relatively, and then this 0.5 breaks a lot before it gives the pressure. Relatively speaking, this one is doing a lot more. You see, it just like breaks a little and then gives the pressure, gives the support right away, So if you use this 1-to-1 ratio to featherdice the channel and then draw the Fibonacci ratio from there on, it gives much better places for you to indicate the market resistance and support. So I've been always saying that there are same patterns getting repeated in the market again and again. But unless you draw the correct trend line, unless you use the correct simple map to featherdice this, you will not be able to see it. Let me use this. So I'm just using this same thing, the neckline to the cycle top length or to the length here. So let me this time turn it to red color to easier to look at it. So I'll just copy and paste now, and then I'll just line up here. All right, so this is the 1+1-to-1 ratio cycle top neckline ratio. And then this is the second time, the third time of this cycle. So do you see this? The third time, let me try to be more precise. So this, the third time, is arrived somewhere around here. So the market is doing this green channel break, and then it gives a sharp move down and then go back up, and then it goes sharp move down and go back up. Let's see in the bigger picture. Remember, this green channel is the right one. Maybe I'll delete this in order to not to confuse you. So here, the market made a steep plunge and then go back up. the market made a steep plunge 3 times the original one, and then it rebound. Does this curve look very much like here? Do you see the similarity of this V? And then if we zoom out, the market is doing this down and then this V. So this one is very, very similar with this one. Is it possible this continues with the movement here? You see, we do it again. The initial movement steep down and then round shake up, steep down, round shake up, and then steep down, and then steep down. Does this look very similar to here? We got this 0.5 ratio right here, right? If we do something like this, just change a little bit, because this is the 3 times drop from here, right? If we point the 0.5 here, you see the 0.786 is here. If we really think this one is equal to this one, and then we enlarge this as the 0.5 here. Remember here, steep down, round shake up, steep down, round shake up, steep down, 2.5, 2.5. So maybe we here is just equal to here. It is possible. And then everything matches nicely. You see there's a pressure from 0.786, and then the pressure here is 0.786. So you see the market does go down. According to this map, it should be go down to the 22,800. But then again, we do not know how the middle will go. It might, because it is repeating here, it might as well continue to go down. I was hoping the market to go there, but so that I can get a better price to short sell it. But then it might not go there. It might continue to drop due to this structure. So this is very interesting to see if the market is continue to go down. It actually synchronized with what my other financial astrology indicator says, and then my effective stop loss is at around here. What that means is, unless the market breaks 26,700, otherwise I see the market go on like this. But one thing, sometimes the market can withdraw this energy block in the middle and then go back up. But then we always will receive hints from the market. So far, we do not have any hints from the market that it will break this yet, go back up to break this energy block yet. So far, I am seeing this energy block to be moving like in the coming 1-2 months. But then it always have a chance to end this energy block earlier. And if we see this, we'll inform our subscribers as well. But this is so far what I see. And then you can see this unless, you can't see this unless you use the 1 1-to-1 ratio to validate the channel that the market it is moving. So for this one, it is the blue one. Instead of the green one, it is the correct channel it is working in the market. So my point is, do use simple math. And this is your takeaway of this session. Do use simple math to validate your indicators. Whatever it is, RSI, MACD, I have other lessons or PDF which talks how we can power up our MACDs for our trading purposes. But for this particular live session, I'm talking about this trend line. And then we use this simple math, 1 equal 1, the ratio of 1-to-1, to validate the market is walking this channel, and hence we should start counting the top from here and not from anywhere else. And then, so if you without this, okay, just I'll let you see for a final time. This is sharp move down, round shake up, sharp move down, round shake up, sharp move down up to 0.5, and sharp move down up to 0.5, and then pressure at 786, and then so assumingly it will go down to here, assumingly the energy block will go down to here. So unless you have this correct analysis which helped by the math pattern, if we remove everything. So is it, you see the market totally different than what I said? So follow me to add simple math to validate your analysis so that you can see patterns in the market. Thank you. So if you have any questions, I'll stay around for a bit more time to answer your questions. Otherwise, I'll end the live in 2 minutes. One thing. Okay, let me post it on the chat. We are actually offering a few things. So we are offering up to 1,000 US dollar cash coupons for people who, how do I, all right, let me post it elsewhere. So we are actually trying to form a new website, and which is about the book reviews to help others traders. So we are offering up to 1,000 US dollar, 50 US dollar each for each review for people who review WD Gann or a financial strategy book and submit it to us. If you're interested in this, write an email with the subject book review and send it to support@gannexplained.com so that to get the details how you can get this 50 US dollar cash coupon. And I've said in the lives that I have taught how to use simple math to help power up the MACD. So if your favorite indicator is moving average and RSI, type the email again to support@gannexplain.com with the subject MACD and RSI, and we'll send you the PDF. And you can also type send the email to the same place with the subject hidden law of vibration to get more details on our signature product, Trading Genius Formula, which teach you how to use simple math to locate the energy patterns, the energy block in the market. And we're also releasing a signaling service. And if you are interested in it, send an email with the email subject with this to the support@gannexplain.com. And if you want to have all of this information, send the email with the FB treat as the title, and we'll reply you with all the information. So will there be a recession? There's a question. Will there be a recession? I think it is too early to say it. We always try to guess a 202 market from here. Right now, I see the market will go to the previous set level, but then I don't see the market will go any lower for that. And if you are afraid of a recession, you can always hedge by shorting the Dow, or maybe just change your 401k funds to some stable investment like the bonds investment. It is too early to say it will become like a 10-year recession, but for now, I just see there is possibility to go as low as the price I said earlier. But then usually if it went at that low, it will have a sharp move up. So, and then a big range bounded market between these levels, between now and the levels that I said. So let me know if you have any other questions, or else I'll end this live now in 1 minute. And thank you for your time joining our live session. So remember, our takeaway of this session is add simple math to validate your chart pattern or the technical indicators that you are using. The market still going down. I was hoping the market could come here so that I can short sell, but it is natural to go down because it is a down moving market. But stay alert. If there's a rebound to here, that is very good chance for you to short sell. So thank you for your time, and I'll end the live now. Do email us for these information, and I'll talk with you on email. Thank you.